Bitcoin ETFs take in 1.67 B over 5 days, as IBIT leads US spot. Bitcoin ETFs recorded 5 consecutive trading days of net inflows, totaling $167 billion, according to a report shared by Cointelegraph on August 27, 2026. BlackRock's iShares Bitcoin Trust, IBIT, led the group. The buying ran alongside a spot price that sat at $76,686 as of August 22nd, down 1.8% over the prior 24 hours, but up about 22% over the past week. That split matters. The daily tape looked soft while the weekly trend pointed sharply higher, and institutional flows kept moving in one direction through both. 5 green days while spot dipped, a single day of ETF inflows says little. 5 in a row is a pattern. The $1.67 billion figure covers net creations across the U.S. spot Bitcoin ETF complex, meaning new shares issued outpaced redemptions on each of those days. IBIT taking the lead is the part worth sitting with. BlackRock's fund has been the dominant vehicle for this cycle's institutional Bitcoin exposure, and its creations tend to reflect allocations from advisors, funds, and treasury desks, rather than fast retail money. Those buyers were adding while BTC printed a red 24-hour candle, which is closer to accumulation on weakness than momentum chasing. The macro reading from the market itself was still greedy. The Crypto Fear and Greed Index sat at 76, firmly in greed territory, as of August 22nd. Sentiment and price diverged. The mood was risk-on even as the day's price action leaned lower. Accumulation, not a chase context, turns a flow number into a signal. Bitcoin's 24-hour move was negative, yet the 7-day move was roughly plus 22%. Money entering ETFs into that kind of chart is not a top-tick reflex. It reads as buyers using intraday softness to build positions after a strong week. For the wider market, the setup was mixed on the day and constructive on the week. Ether traded flat at $24.03, up 28% over 7 days. XRP was the standout at 147, up 5% on the day and 46% on the week. Solana held 92.43, up about 23% weekly, and BNB sat at $690, up 13% over the week. All prices are as of August 22, 2026, from the live market snapshot. Bitcoin's ETF bid was the clearest institutional tell in that group, since no other major asset has the same regulated wrapper pulling steady U.S. inflows. Persistent ETF creations also change the supply picture. Coins moving into these funds tend to sit in cold custody rather than circulate on exchanges, which tightens available float over time. That is a slow structural effect, not a same-day price lever, and it does not override short-term volatility. The spending side read, steady institutional demand does not settle the question most everyday holders actually face: hold or spend. A rising Bitcoin balance is easier to leave untouched, which is one reason stablecoin spending has become the default for day-to-day purchases, while BTC stays in the long-term bucket. Spending appreciating Bitcoin directly can also trigger a taxable event in many jurisdictions, so the stablecoin route sidesteps both the volatility and the accounting friction. For readers weighing exposure against liquidity, the split flow is a reminder that price and access are separate problems. ETFs solve regulated exposure for portfolios. They do nothing for someone who wants to pay a merchant. That gap is where crypto cards sit, converting a balance to fiat or stablecoin at the point of sale. Anyone funding a card from a volatile balance should note that the disclosed spread is rarely the full cost. The Visa or MasterCard network markup and the conversion spread at checkout both stack on top of any headline fee. One caveat on all flow data: daily ETF numbers are estimates until issuers finalize them, and a 5-day streak can reverse in a session if a single large holder redeems. Treat $1.67 billion as a strong directional read, not a guarantee of the next week. Next.